Okay. So again, thank you for coming. If you guys have any questions along the way, don't hesitate to put a question in there, and we'll cover everything, hopefully in about 45 minutes. But I'll hang around as long as you need me to answer any questions you have. So tonight, I just wanted to give everybody just a really high-level overview of the Conservative Options Trading Group. We have a Facebook group page and a private trading group, which is very comprehensive. So tonight, I just wanted to kind of talk about, the trading community, do some excerpts of a 2023 market analysis that I did a few weeks ago. Want to talk about our trading strategies, the main ones we do, which are the in-the-money covered call, the dividend capture trade, and with the diagonal collar, put spreads, and elite trade, which I call a leveraged covered call. So that is what we want to cover tonight, but I'm definitely open to answering any questions anybody has. So the first thing, just wanted to touch base on what people are expecting or fearing or thinking about the new year in terms of trading. So first of all, per the Confidence Board, they felt that an imminent recession would be followed by slow economic growth. And really, that's probably been the most common prognosis for 2023. Really, a lot of it is due to definitely high inflation rates, rapid monetary tightening, and projected consumer and business confidence. So a lot of kind of more continued pain in 2023 is kind of projected by the Confidence Board. And then beyond this year, they felt that the economy would return, but it's going to be at a much slower growth rate. And, the risks include, geopolitical frictions, labor market shortages, inflations, and high interest rates. Another report said, they expect us to be in a recession as we enter the year. The GDP was, a big decrease in GDP following the COVID-19 pandemic. We expect, inflation to remain at pre-pandemic trends for several years. They don't anticipate interest rates falling until 2024. And the expectations for near zero growth in 2023 is not really positive news so far. The other flip of the coin is this is a chart that shows the S&P annualized rate of return by year, and it starts all the way back to 2000 through 2022. And what I took from this is to date, we've never had a back-to-back big red calendar or big negative returns on the S&P. So, we saw 2008, which was a horrible year. And then it followed up, with several really good years. And then we've had a couple years in there with negative, but they were followed up by positive years. So, I guess the bottom line in terms of the 2023 expectation is we don't really know. My theory is we're going to start the year off slow because inflation, interest rates are just not going to be back in line anytime soon. But I think as the year progresses, we should be able to finish the year in the green. So that is kind of the overall take. Nobody knows for sure, but that is just some information that I wanted to share with you guys. Last year, the S&P was down 18.1%. The conservative community, our trades, closed trades, we were up 8.25%. So we're definitely a conservative trading group, and we're not hitting home runs. We're trying to hit singles and really focus on risk protection. So some of one of the main strategies that we started with this group was the in the money covered call. And really what that is about is it's buying a stock, and instead of selling instead of selling an at the money call or an out of the money call, what we're shooting for is we sell an in the money covered call. And our goal is we want to get at least a 24% annualized rate of return with at least 5% of downside protection. So that's what we're looking for in these kind of trades. Again, not home runs, but singles. And I work on a watch list. Antonio helps me. We develop a weekly watch list, and we screen it for strong fundamentals, strong technical analysis. At the stock or ETF has to have good open interest and liquidity and low beta. So those are kind of the criteria we look at to develop our watch list that we trade in the money covered calls. So I don't know if anyone has any questions so far. Everybody good? Okay. So that's the in the money covered call, and we do a fair amount of those. Here's just a quick example of one. This is an actual trade alert where we show, what we bought the stock at or ETF at, what the shares were bought at, what we sold, how much credit, what the rate of return is, and the downside protection. Then we give you the annualized rate of return and the break even. And we track all of these from the beginning all the way until conclusion. So, and Paul, you asked the question, do we do cash secured puts? Yes. So we'll cover that one in just a minute. But the in the money covered call is one of our bread and butter strategies. It's a good conservative with a really good rate of return. And the other thing is we will exit the trade if the stock drops below 8% of the purchase price. So we have really tight we have really tight exit rules on our trades. So the latest strategy that we've kind of really been doing a lot lately is what we call our dividend capture trade. And it is simply an in the money covered call on a stock that is coming up to X dividend. So what we do is we identify, we add those stocks to our watch list, and those will show us exactly when they go X dividend, what the dividend amount is. And then we set up an in the money covered call that gives us the highest probability of collecting the dividend and as much possible downside protection as possible. We use the same screening process for dividend capture as we do the in the money call, and we seek either the same higher rate of return, 24% or higher, and at least 5% downside protection. So that's been a great strategy. I try to post one a week in the Facebook group page, but it's a great strategy. One of the things that I would caution anybody, if you're looking to do dividend capture trades, you want to make sure that it's a high quality stock. So sometimes I'll see people post out there and they're picking a stock to get the dividend, and the stock really is a higher risk stock than you would really be comfortable for, and you probably wouldn't have picked it had it not been for the high dividend. And Deb asked a question and says, if I want to trade monthly options, how do I adapt your weekly watch list to monthly trades? So we actually, for our covered calls or in the money, we primarily do use monthly options. It just, the watch list comes out, is updated every week. So they're monthly trades. Like right now, we're just going to roll over and start selling February expirations. So it's really designed for monthly options or monthly covered calls. And then we just started adding a diagonal collar to the in the money cover call to collect a dividend. And that on those trades, what we're doing is we are buying the stock, selling the at-the-money call, and then we're setting up either a put or a long put spread for downside protection. So we're testing that out now, and so far so good. But that's an extra kind of hedge, particularly when the market is kind of very volatile. Today was a good day in the market. A few days ago wasn't a good day. So we're in these really choppy weather. So we want to make sure that we are finding ways to get us as much downside protection as possible. And then the other thing that we do in the group, which is pretty interesting, we call it our dividend scalp trade. And these are trades that we look for every day when they have a dividend coming up, and we set up the trade so we're deliberately expecting to be taken out, to have our shares reassigned, but we're able to make a really nice quick profit on the trade and then redeploy our capital another day. So that's kind of the way the scalp works. So a question came in about am I missing something? The in the money covered call. We're selling a put or call, I'm sorry, below the expiry, below the purchase price. And no, you didn't miss anything, Paul. The way we set that up is we're paying 51. We're getting $8.34. So we already have a built-in profit of it. In this particular case, $150 per 100 shares, because we're going to be taken out at 45. As long as the stock stays above 45, we'll be taken out, but we'll make $150 on the trade in 24 days. So that's kind of the whole concept of the in the money covered call. So I hope that answers the question. And it's a different strategy. And I can tell you, when I first kind of did this strategy, I was in a seminar and the guy was talking about covered calls, and he mentioned that there's some people that sell in the money covered calls. So all the way through this session, I'm running numbers to say, will this really work? So I asked the guy, I said, do you really have people who sell only in the money covered calls? And he kind of smiled and he said, yep, I've got a hardcore group, and they make income by selling in the money covered call. So that's kind of was one of the initiatives for kicking off this strategy. So anyway, so here's an example of a dividend capture trade. So again, we bought the shares at 110. I sold the 105, so we're $5 in the money. We collected $5.66 per contract, and we collected a dividend of 44 cents, which wasn't a great annualized dividend. So the net credit, including the dividend, was $79 per contract, which would be a 1.2% return in 3 days with 5.53% of downside protection. So it was an annualized rate of 55%, because this was a 3-day trade. So so that's kind of an example, and that's exactly the format that we send all of the trade alerts at. So and they're all captured on the website that Antonio went through briefly. So that's the dividend capture trade. So the next thing we do is put spreads or cash secured puts. So first of all, we use the exact same criteria to select stocks or ETFs that we're going to do these trades on. And we look and we add them to the watch list. And before we go, I'll show you what the current watch list looks like, and that will kind of give you an idea of all the areas that we show. We look for a minimum of a 6% return on risk on the put spreads. And we want our short strike to be at least 5% below the price. And in these trades, we're willing to take the shares at expiration and sell calls against them. However, we will exit the trade if it drops 8% below the short put. So, and we almost always do them as a spread, but they're set up. So if you only want to do cash secured puts, you can do them that way. I could share with you some reasons I like to do them as a put spread, because we want to be very conservative and, maximize our downside protection. So, so that is the put spreads, and we do a lot of put spreads. And here's an example of one where we did it in CAT. We saw it was trading at 249.56. We sold to 235. We got a 6% return in 10 days with 6% of downside protection. And then we've had some people that have said, well, if I'm doing this trade, can you tell me how to do it if I want to do an in the money covered call? So we add that in. You could just buy the shares, sell the 122.35 and get a similar net credit. So that is just a quick example of the put spread. And then we've been doing they're leap trades. They're really not officially leap trades, but I like to call them leveraged covered calls. And what they are is just long diagonal or calendar call spreads. And they basically create a synthetic covered call. So we buy, and we use a lot of the same stocks that are ETFs that are on the watch list, and we buy calls that are around 90 days out. So we're going to be selling like April, and then we sell weekly calls against them. And our goal on these trades is we want to net about a 30 to 50% return on each trade. And one way of thinking about it is if you bought 100 shares of a stock and invested $10,000 and said, I'm willing to risk 10% risk, so $1,000. If you bought $1,000 worth of a long calendar, or long diagonal, or long calendar, you would know that the most you could lose would be that $1,000. And by selling weekly calls against them, we can reduce the basis in the trade almost to zero. So that's the other thing. So we can reduce the basis by selling weekly calls. They're a defined risk trade, meaning that whatever we paid for the call is our max risk. And then that is reduced as we sell calls against them. And the other thing is this could be set up, and we have one open one now that is a bearish trade. It's a long diagonal put. And so it functions as basically a negative covered call. It's a covered put. So that's been a pretty successful strategy so far. And yes, Jeff, you could definitely do long diagonals on something like the SPY. And the beauty of that is, if you were buying the SPY, 100 shares of the SPY, it would cost you like $40,000 in capital, where you could buy a diagonal call and pay, probably 10% of that amount of money or less, depending on which strikes you use. And so great question. So that's a leveraged, I call them leveraged covered calls, because that's really how we're treating them. We're not trying to go out and, really long leaps. We're just trying to buy the call instead of buying the stock and selling calls against them. So here's a leap trade that we did. That the ETF was selling at 83. We bought the March 83, which was a 50 delta. We paid 582, and we began to write calls against it. And then we'll track what the basis in the trade is as we sell additional calls. So so it's a great little strategy. I guess the downside of that strategy, it's pretty intense if you want to sell weekly calls. So you have to, we try to cap how many we have. So we take profit in one before we add another one. So, and then in a bearish environment, one of the interesting things is that you can actually collect higher credit selling puts than you can selling calls because of the, the skew there. So that's, if you see one that looks like, it has a lot of downside protection, a long diagonal put or calendar is a great strategy to use. So, so here's just a little bit about the group. So we're a private trading community. We started in Facebook, and then a lot of my friends wanted to start a group, and we've opened it up. We've been this is our third full year of doing this group. So we've grown, but not grown to the point where we can't stay, small and interconnected with everyone. So I send out trade alerts every day. I generally send out one a day, sometimes two a day, and you saw copies of what they look like. So, and we have a spreadsheet that shows all of our open trades. So if you ever want to see what trades are open, it's on a Google sheet that you have access to. Every Sunday, I create a weekly watch list that and I'll show it to you in just a second when I'm done with the slides. If you're interested, it shows, what the price is, what the downside protection is, what the put spread would be, what the cash secured put would be, and all that, and any comments like earnings are coming up or things like that. So the weekly watch list is updated once a week for everybody and sent out through the community. So let's see here. There was a question: can all of the strategies be applied to ETFs? Absolutely. Yeah. And actually, we have a lot of people who only trade ETFs. So, if, for example, we're making a trade on an energy stock, you could do XLE. If you just wanted to do it on the SPY and the Q and IWM, perfect. I mean, all the strategies apply. So there's, it's definitely can do it on any stock that meets our criteria. We do a weekly training session every Wednesday. We meet at 2:00 Eastern, and we either do a live training session. I'll create, PowerPoint slides. It's recorded. Or sometimes what we'll do is we will actually look for a trade together and put that trade on. So every Wednesday we're talking. I update a market scorecard. What we've been trying to do is kind of look at all of the indicators or all of the economic data to kind of determine what's the direction of the market. One of the big the piece in our market scorecard is what sectors are in play. What's the strongest sectors? What are the weakest sectors? And on Monday, at 9:00 before the market opens, we meet, we go over the market scorecard, we go over the watch list and the plan for the week. And then one last call we do on Friday at 2:00 is just a final review of anything that's going on in that week with our open positions. And every morning I send a daily summary report to everybody via email of what we did the previous day. So you can kind of see, okay, what trades, in case you missed it, it's a great double check to see what trades were made, closed, adjusted. And we do have a chat room feature, which lets you interact with other members of the community or send private email or chats to me. So it's a pretty comprehensive group with a lot of features. So I did want to share that with you guys. Any other questions right now? Okay, one question was, how much capital is your portfolio for? One of the things that we do is, I mean, it's pretty much set up for any kind of size account. I would say you'd probably at least want to have a $10,000 account that you could trade this. And the stocks that are on the covered call list, we go down as low as, $30, $35 in price. So they have, lots of stocks. And then we have the put spreads, the elite trades. So I would say for probably at least 10,000, we have people with, that much, and some people with more. So hope that answers that question. So here's just some feedback from members, and it says, these are just examples of stuff in the chat room, which is great, and we look at them every day. So we're active every day in the trade. So so Jim asked a question: what our returns have been the last 3 years? The 2 previous years, we were right around 20%, 24%. Last year was a tough year for everybody, but that's basically what we have been making in the trade. Paul had asked a question, while these may be traded on ETFs, is there a liquidity issue on ETFs? So it depends on which ETF you're using, Paul. I mean, if you're using SPY or IWM or the Qs, you won't have any trouble with liquidity. But a lot of times you'll see these kind of oddball ETFs that when you look them up on the option chain, there's absolutely no liquidity. So we just pass on those. But, we try to look for, any stock or ETF that has great liquidity. Because the worst thing you want to do is you don't want to be in a trade that you made a good profit, but you can't get out of. So that's the thing with liquidity. We'd like to kind of let you take a look, check us out, invitation to join us in our group. We offer a free trial to check us out, so you don't have to, put up any money. You can, be a part of the community for a period of time. We are also doing next month, we have plans to deliver and conduct a 4-week training session. We did this in November, and it went really well. It was a great, refresher for current members, and it was a great way for new members to kind of learn how to all the different strategies. One of the things that we do, we have an annual and a monthly membership. The monthly is $130 a month, and the annual is $1,000. I meant to have that typed in. And one of the things that we do for all new members, I will do an onboarding call to just answer any questions that you have, and regarding the methodology, position sizing, things like that. So that is what we do, and we have, Antonio helps with any system issues, does a great job of getting people up and running quickly, and there's no long-term commitments. So if you try us out and you don't like it, no hard feelings. If you want to sign up for the trial and you don't like it, then that's fine. We just want to share this with you because a lot of people in the Facebook group have kind of said, expressed an interest in the group, and so that's what we're offering. And again, it's a free trial basis, and we would love to have you check us out. I think if you kind of dig in, you'll find that if you're a conservative option trader and don't want all the noise and distractions, this could be a good community for you. It's a great group of people made up of both new people and some really experienced people. So you would fit right in. Jeff asked a question, do you have software that helps you screen? Yeah, we look at a couple of different things. We screen it through IBD, we screen it through bar chart, we look at Navalier, we do a screen of upcoming dividends that are coming, and we would go into more detail on that in that 4-week session. So, but yeah, we have a pretty extensive screening process that that we do, and it takes a few hours every Sunday, and we put it up and we update it throughout the week as well. So it's not just a one and done. So if we come up with new ideas, and a lot of the members will suggest other stocks or ETFs to add to the list. So it's very interactive. So anyway, so if you guys have any questions, the website is conservativecoveredcalls.com. The email is conservativecalls@gmail.com. My email address is brian.terrycfp@gmail. So if you have any questions, be happy to kind of answer them, get on a call with you, just so you can understand exactly what's going on there. So any other questions? And then if you guys are interested, I can show you the watch list and the open call list. So would that be of interest to everybody? Okay, so I'll do that. And so anyway, let's do that. So I'm gonna last chance for any questions. So I hope you liked the presentation so far. Let me get the watch list up so I can share that with you guys. Okay. Okay, so here is our watch list. And we always start off by dating them for Monday. And so let's just, and then get this to update the price. Okay, so we have the stock or ETF. We have the live price. That's a Google price that comes in. What the price is as we put the trade on, we have an exit level, which is calculated at 8% below the stock price. We would sell our short call here, what the credit is, what the net credit or profit would be on the trade, what the cash secure put credit would be, what the expiration is, what the cost per 100 shares is. And you can see here we have, some, high price stocks and some low price stocks. So, and then we have the rough rate of return. In this case, it was 2%, 7% downside protection, annualized rate of return, the break even, the number of days in the trade, and that would be from the date here to the expiration date. Any notes such as earnings coming up, so we'd want to be out of this trade before February 9th, and then the put spread that would be applicable. And what I generally do is I will highlight the put spread if it's lower than the covered call strike. So you could use, this strike, get 73 cents on a $900.27 risk. So that's the watch list. And it's and then what we also do is some people have wanted to see some higher beta. So these are stocks that have a beta over 1.3. So we add a section there, and then this section below is really for you to use. And if you have a stock and you want to run the numbers, that's kind of a trader's workplace or something. So that's the watch list. And again, it gets updated every Sunday or Monday if the market is closed on Monday, but it'll be the day before, so you have plenty of time to review it. And then, one of the things that someone just asked, Deb, is the exit level. And yeah, that would be kind of the stop loss or when we would get out of the trade. So if we bought the stock at 145 and it dropped down to 132, we would exit the trade. So that's kind of built-in kind of risk management. So that is our watch list, and it's on the website, and you have access to it all the time. So it's a Google sheet that's shared with members of the group. So anyway, so let me, if you're interested, I can show you one more spreadsheet. We have a ton of spreadsheets. So here, let me just show you this one. This is our open trade list. So you can see what we have open. These are the put spreads. We'll also track how far out of the money we are with them. These are open covered calls. These are leap trades, and if I close them out for a profit, I usually highlight them in green. So these were all profitable leap trades. We have a SPX hedge that we do, and so that's updated all the time. Anytime a new trade is added, it'll be on that list. So so that is part of it's one of the links on the website. So anyway, I think I have talked enough. So any final questions that I can answer for you guys? Okay, so I appreciate your time. It was great feedback, great questions. What I would suggest is, if you're interested, take the free trial, check us out. If you want to spend the month of January kind of taking a 4-week course on the process, encourage you to do that. It's a great way to kind of immerse yourself in all of the various strategies. So with that, oh, here's one more question. Let me make sure I get okay. So and Gary, yes, it was recorded. I will be posting the recording along with the slides, and I appreciate you guys hanging in there on a Wednesday night. And I'm going to stop the share. And anyway, but it was great talking to you guys. I'm going to stop the recording.